Gold prices gain, yellow metal doing its job as risk hedge as private bank buying jumps. Gold prices rose against all major currencies on Friday, showing a small weekly gain versus the US dollar at $1,735 and breaking above £1,400 for UK investors. World stock markets rose to cut last week's drop in half on further easing of COVID-19 lockdown rules. Euro gold prices edged 0.4% higher for the week to €1,543 per ounce. With shops, bars and restaurants now open across much of the European Union, the British government downgraded the novel coronavirus alert to level 3, a big moment for the country, according to Health Secretary Matt Hancock. New data today showed UK government debt now exceeds 100% of the world's fifth largest economy's annual GDP for the first time in 6 decades. Gold is doing its job as a risk hedge, said a webinar from Head of Market Intelligence Rona O'Connell and Senior Analyst Natalie Scott-Gray at Brokerage International FC Stone on Thursday, contrasting the yellow metals performance across the COVID crisis with the crash in base metals and energy prices. Professional investors have been very active, while the Asian physical markets remain moribund, they explained, making gold the outperformer among its peers and other asset classes during the pandemic, because the prominence of gold's investment activity makes commodity-related fundamentals less critical to price action than for the industrial metals. With gold prices now around 25% higher from a year ago in most major currencies, private bankers are urging clients to buy gold, says Reuters, something not seen since the sector's 2009 advice following the Lehman Brothers collapse of late 2008. The giant SPDR Gold Trust ended last night unchanged in size at its largest in 7 years, but cheaper competitor gold ETF the iShares product expanded another 0.2% to reach yet another lifetime record size, marking 13 consecutive weekly inflows. Looking at the back half of 2020, the fundamental supply-demand picture now points up for both gold and silver on INTL's analysis, but the outlook is down or neutral for the other 8 metals studied by O'Connell and Scott-Gray, including for platinum, oversold, but still in a surplus. Lockdowns in South Africa have, however, had more of an effect here than lost mine production in most other metals, INTL's team note. Longer term, the diesel auto sector in China especially will underpin demand. As for gold's biggest consumer nations of China and India, economic uncertainty and high gold prices have quashed the Asian physical markets, O'Connell said, but a V-shaped recovery could see pent-up demand unleashed. Among Indian households, said PR Somasundaram of the Mining Industries World Gold Council to CNBC-TV 18 Today, income growth of 1% has historically resulted in 1% growth in gold demand. But a 1% rise in rupee gold price instead sees demand fall by 0.5%. Rising 25% last year and surging by 1/5 so far in 2020, gold priced in rupees held flat today, trading around 1.0% below last month's new record high of Indian rupees 48,000 per 10 grams, a cost which includes 12.5% import duty plus GST sales tax. Gold prices in China meantime slipped to end the week lower from last Friday, extending the discount for metal delivered in Shanghai to $12.60 per ounce below comparable London quotes. For the week as a whole, that took the average Shanghai discount to $12.30, wider by almost 1/2 from last week's average and suggesting a drop in demand relative to local supply in the #1 mining, consumer and importing nation.